The Rebel Capitalist Show.
How has we'll call it the cerveza sickness for YouTube here, how has that affected your business? Because I know a lot of people watch my channel to get kind of macro information, and a lot of them are concerned by potentially going into real estate as an investment that, oh my gosh, if we really struggle in 2020 and then into 2021, it's going to be harder to collect rent. So real estate might not be as good of an investment. And what I usually come back with is, well, it depends on where your property is and how desirable your property is for a potential renter. So what I like to do is just buy residential starter homes in very good neighborhoods with great school districts. So even if you do have high unemployment, people are going to kind of go down the totem pole, the housing totem pole, so to speak. And that person that was potentially buying a $300,000 house is now maybe your renter at $1,500 a month or something like that. But how has this whole situation affected you guys, your rents, your cash flows? What are you seeing on your end?
Well, so it affected our whole industry pretty rough. I mean, not only do we have moratoriums in the individual states and by Trump and the CDC, and that's getting kicked into next year, they basically are saying, hey, we know that you guys owe the lender, but they don't have to pay you if they can prove the hardship. And by the way, I get that. I'm just saying that is what it is. And so obviously we have a number of people that are in that scenario. And so we have rent collection issues. We have tour issues. So when people want to move in, all that had to be buttoned up on, how do you do virtual tours? How do you do virtual rentals, virtual rent collection, all of that stuff. Our company was already pretty progressive around most of that. So that part didn't affect us as much, but we have employees with COVID, we have residents with COVID, we had all the PPE stuff that we had to follow, and we had to shut everything down. And so the whole industry got hurt pretty good. Ironically though, as people stayed home, they didn't move around as much. And so we didn't have, people moving. They were like sitting in place. And so whatever your occupancy was in mid-March, man, that's where you were, in April. Yeah, largely. And so there wasn't a lot of people moving around. So that was a benefit. But, on a macro level, I have friends, when you talk about commercial real estate, really you got hotels, industrial, you got malls, you got retail, you've got data centers, you've got hotels, or, boutique hotels, big hotels. So, and then in multifamily, you got Class A, Class B, Class C. Class A is kind of the new stuff. Class B is, maybe that 10-year-old stuff. And then Class C would be, more of the affordable housing stuff as an example. So those are all very different. And depending on where they are, you have very different outcomes. So like I have property in Houston, Texas, and it got hit pretty hard with oil. And so it doesn't really matter if it's an A, B, or C, it's an industry issue. And so same thing in Tulsa, we have property in Oklahoma, and same kind of stuff. And so, but then fast forward, you might go over where we have something near, let's say a healthcare campus, like in San Antonio, and it's doing really, really, really well. And so it's a lot of it's based largely on who's in your property, and then what they're located near.
So how's it working out with the banks, Ken? Because I know your renters can say, oh, well, we can't, pay you rent this month, or we'll pay you in 6 months because of, the cerveza sickness or the CARES Act or whatever moratorium. But the bank has to take that into consideration, I'd imagine. So how does that work?
Banks are non-forgiving, George.
Oh, okay.
But no. Let's just put it this way. We've chosen not to go to any of them. Okay. And now I have friends that have had to, and we had one property in Oklahoma. So let me back up. So part of the reason why we never had to is because I'm a big fan of massive reserves for things that I don't see. Mm-hmm. And so we had a lot of money in reserves for all the properties. And I was like, listen, guys, it could be fire, it could be a windstorm. We've had all that. We had tornadoes, we had hurricanes, we've had all that stuff hit our projects. There are times, like we had one project in Houston where I lost over 100 units in Hurricane Ike. Well, I had to pay a guy $165,000 just to clean up the site before insurance kicked in. So there are times there's money that you need to run big projects. And so I always was pretty heavy on the reserve side. We had one property in Oklahoma that the residents were having a tough time, and we were dipping down into into our reserves and all that stuff. And so luckily we didn't have to put the lenders on notice or anything like that. And like it or not, when you choose to not pay, I'm not saying that people don't have to, aren't in that situation, but when you choose that, like it or not, that's going to be asked later. And so I didn't want to be in a position to where I said, hey, we didn't pay on all these, and oh, by the way, I'm fine now. Can you give me another loan? So we knew, I know that they look at my history, they look at my payment history. All that stuff is predicated on the types of loans I get, the interest rates I get, the terms I get, so you can negotiate on all that stuff. So we chose not to go down that route, but I have tons of friends in retail and office. They don't have that easy. They're collecting 10, 20, 30%. And, they're just trying to protect their nest egg somehow.
Yeah, I want to make a couple points there. Number one is, and I don't want to say anyone's doing business poorly or anything like that. I don't want to throw anyone under the bus. But when I talk about allowing businesses to fail, this is one reason why I say that, because in free market capitalism, like Milton Friedman has always said, the loss is just as important, if not more important, than the profit, because of Schumpeter's creative destruction. So those players that are in the game that are, let's say, a little weaker, may not have the cash reserves or didn't save for a rainy day, they go out of business. And the people that were more prudent, that ran their business better, they come in and take the assets over, and the entire economy becomes stronger as a result. So next time you see the government coming in and propping up businesses that maybe should have failed, just remember that we're making our economy weaker in the long run by not allowing people like Ken, who make good business decisions, to come in and take over those assets. So I just want to say that first and foremost. And then secondly, a lot of people talk about, well, I can't get a loan, or how do I use other people's money, or I don't have any money of my own. And it's all about relationships. And you came from nothing. I came from nothing, but we were somehow able to, over time, build relationships with the bank. Now, again, I'm a little fish compared to you, but the relationship I have with my bank in Kansas City, they took a risk on me because I was an entrepreneur. I really had no W-2 income or anything that would be typical, like a doctor or a lawyer or something like that. So they took a risk on me. Well, I've paid them many times over the years. You never missed a payment on a line of credit or any loan I've had with them. So now if we have another downturn, you go back to them and they're going to be much more likely to lend to you. So you just made a great point where now you're really using this as an opportunity to make your relationship with your banks even stronger. So the next time you go back to them, they're going to remember, remember what happened back during the cerveza sickness? This Ken guy paid us, even though he was getting stretched, even though his renters weren't paying him, he never missed a payment. And they're going to say, how much money do you need, Ken? I'm assuming, am I right there?
Yes, that's right, George. I mean, I know there's a lot of legislation around this, but the truth is it matters. If you're not paying somebody, it matters. And so, yeah, so I'm a rainy day guy. I'm like, listen, there are things that are going to go wrong. I don't know what they are going to be next, but they will. And so let's have a reserve here. And it might be a roof, it might be a hailstorm, which we had a hailstorm break 40% of our windows in one of our properties in Oklahoma City, 40% on a 256 unit property. We had a hurricane, we've had tornadoes, we've had lots of fires. And so those are real things. And so just over the years, I've like, listen, we're going to have plenty of reserves. And then, let's never get into position where we don't pay the lender, because they're our lifeblood for new deals. As you know, debt in the future is going to be an asset, right?
Right.
That's all I'm thinking about, is how do we make these guys whole? How do we continue our relationship with these lenders over the long haul? And these guys move around, and I'm in a database somewhere, trust me. And so whether it's said or not said, they know if I'm paying on time, and no matter, they all share data just like we all do. And it's important.